If you tried to grow your small account multiple times but always ended up losing your last dollars, I have good news. Today I've completed a selection of personally tested trading strategies for small deposits. Today we will talk about risk control, how to choose currency pairs, look at simple but profitable strategies, and analyze few real trades. Ready? Let's dive in! First, let's clarify what we consider a small account. This is important because for some people $300 is a lot of money, while others spend that amount on breakfast every day. A small account is a brokerage account with a balance ranging from $100 to $1,000. If it's less than $100, it can be called a super small account. Many think the only way to grow a large deposit from a small one is to go all-in-one trades, meaning if they have, say, $300 in their account, they'll open options for $100 to $300. Yes, this might work for a while. Some manage to increase their deposit by 5 or even 10 times, but this happens to very few. Mostly after a couple of such trades, you'll end up broke. But small accounts have their advantages too. You can learn proper money management and risk distribution, which will prepare you for trading large sums. Since we started talking about risk, let's discuss how to reduce them in binary options. The first thing to consider is how much to invest in trades. I recommended opening options worth 2 to 5% of your deposit. So, if your account has only $500, you can allocate $10 to $25 per trade. This way, you'll spread the entire amount across multiple trades and reduce the risk of losing a large portion of it. Second, only open trades based on the most obvious and strong signals. If a strategy gives a signal that only vaguely resembles what's needed, don't rush into the market. Wait. The pattern on the chart should match those textbooks, not just slightly resemble them. I think these two rules are enough to start with. If you want more, feel free to join my Telegram channel, where you'll learn much more about reducing risks in binary options trading. The link is in the descriptions below the video. Before I move on to strategies, here's another piece of advice. This one relates to risk during trading. All assets have two important characteristics: volatility and liquidity. Volatility is how quickly and significantly the price changes, while liquidity is how quickly you can sell the asset. Liquidity in the binary options isn't particularly useful, it's more for the stock market and cryptocurrencies. But for a general understanding of the market, remember this term. However, volatility is crucial. It can be strong, average, or low. If the price moves too quickly, it can spoil your entry into a trade. You might want to open an option at one price, but it opens at another, less favorable one. Low volatility is also dangerous. After the trade, the price may remain stagnant or move very slowly, right near the entry point. Often, even profitable options turn negative in the last few seconds due to this. We are interested in assets where volatility is most average. Trading on them is the most comfortable. These are mainly pairs with assets from countries with strong economies: dollars, euros, pounds, and others. Before we proceed further, I'd greatly appreciate it if you subscribe to the channel and like this video. It will help me improve the content and grow the channel. And now it's time to look at the strategies I prepared for you. The first one is breakout trading. Let's head straight to the chart. To catch a breakout level and work it effectively first, you need to determine the direction of the trend. That's the direction the price is moving. On this chart, the trend is upward, and at this point, the price seems to be hitting a ceiling that it just can't break. Look here, the chart has made two touches at almost the same price, but at this point, the level doesn't hold, and the price breaks through it. Now pay attention, I'll show you how to profit from this. It's very simple and you'll definitely remember it. After the breakout, you need to wait for the price to return to the broken level. After that, it's highly likely to rise. When the price touches the level, that's a signal to buy. For selling, you need a breakout below the level in downtrade, like on this chart. It's the same situation, but in reverse. The next strategy is trading with moving averages. A moving average is a curve that reflects the average price over a certain period. First, find this indicator in the list and change one setting. Set the period to 50 in the period line and apply the changes. A line will appear on the chart and you can change its color. Now let's learn how to spot a trading opportunity. To open a sell trade with a moving average, you need a downtrend. Every time the price touches the indicator, it's a signal to sell an option. For buying, you open trades in the same way, but in a mirror image. The trend should be upward and the price should approach the indicator from the top down. And the first strategy for today is based on levels and the popular stochastic indicator. It's for those who prefer very fast trades. On the 1-minute chart, find the level. Then switch to a 15-second chart. On this time frame, we will open trades. The indicator is already installed on the chart, and now I'll tell you how to make money with all of this. When the price approaches the level and the indicator falls into the oversold zone, we get the signal to buy at the point. Now let's put all of this to the test in real conditions. My first trade is based on the breakout level strategy. I immediately enter a sell because I see a signal on the chart. Here we have a level that the price has been testing for some time. At some point it managed to break it, after which the chart returned to the level. I think it will bounce off and go down from this point. It doesn't seem like it now, but the price is gradually starting to give way, and the option brings profit. Without delay, let's move on to a trade based on the moving average strategy. In this area, I saw a sell signal and I immediately entered. Let's understand the reason for entry. The price approached the indicator from below, which means we already have a downtrend, and it's time to go short, because the price will soon start to plummet. Here's the situation as from a textbook. The chart touched the indicator and started to go down, and I'm very pleased with that. As a result, this option also brings profit. And now let's open a trade based on the scalping strategy. Here we have an excellent level from which I'll trade. Now I switch the chart to a 15-second time frame and add the stochastic indicator. I open a trade from the level because all the signs of a good signal have already come together. The price has entered the support level and the stochastic has started to exit the oversold zone. Such a trade is sure to end in a profit because the pattern is very confident. And indeed, look where the chart has soared. That's enough trades for today, but I have to share a few more useful tools for trading on a small account with you. Don't worry, it will be brief and clear. The first one is the RSI indicator, or the Relative Strength Index. It's perfect for combining with any of the strategies I've given you. RSI consists of two levels and a line curve. The levels indicate whether an asset is overbought or oversold. If it's overbought, it means its price is well above the average, and the downturn is possible. If the RSI line enters the oversold zone, the price is well below the average, and there will soon be an uptrend. RSI significantly strengthens the signal of any strategy. The second tool is candlestick patterns that indicate reversals. There are many candlestick patterns, I'll give you just two of them, but the most powerful ones are dojis and pin bars. A doji is a candle with long shadows and a body that looks like a stick. A pin bar is a candle with a small body on one side and a long shadow on the other. When this candle appears at levels, you can confidently expect the price to reverse. If you want to learn more about the RSI indicator and trading strategies based on pin bars, I invite you to my Telegram channel via the link below the video. And finally, what you absolutely need for working on a small account, especially if you are a beginner trader, it's a trading plan. In short, this is a document where you write down all the important information that will make you trading easier. This includes trading goals, entry rules, patterns you're studying, money management, and your strategy. You can even write down books you're reading for self-improvement. Such a plan will help you always see the direction and not get confused in strategies. If you take the time to write it, you'll already be cooler than most beginner traders at this stage. I think there is more than enough information not only to study but also for practice. Did I overwhelm you too much? I know you understood everything, and if not, you'll definitely figure it out soon, especially if you follow my channel here and on Telegram. You can do it. On this positive note, I bid everyone farewell until the next episode and wish you awesome trading ideas and unrealistically huge profits. Goodbye!